All right, let's dive right into this. Welcome to our latest explainer. Today, we are completely demystifying exactly how the purchasing module works in Sage Intacct. You know, if you're a system admin or an implementation consultant, you already know that setting up purchasing isn't just about flipping a switch and turning on a feature. It is literally like drawing up an architect's blueprint. You draw one wrong line and the whole structure is going to lean. So what we're going to do today is build this module from the ground up, from its initial setup all the way through to its final financial execution, just to make absolutely sure your foundation is rock solid. So here is our blueprint for today's explainer. First, the global architectural fork. Second, building transaction definitions. Third, enforcing internal controls. Fourth, the purchasing lifecycle. And finally, number 5, downstream financial impacts. Let's get to it. Part 1, the global architectural fork. Okay, so right out of the gate, when you set up purchasing, you are forced to make a massive choice between a standard workflow and an advanced workflow. And the contrast in how the data gets handled here is honestly fascinating. See, in a standard workflow, your items map directly to explicit general ledger accounts. Super straightforward. But if you choose advanced workflows, you run straight into what I like to call the master data gotcha, because you lose that direct mapping. Instead, you are forced to route every single item through an item GL group, and it's that group that eventually maps out to your specific GL accounts. It completely changes your mapping strategy from the ground up. And that brings us to the ultimate blueprint hard stop. Listen to how the source documentation explicitly warns us here. Most importantly, it cannot be undone. I mean, wow. Checking that Enable Advanced Workflow box is a permanent global change. It instantly rewires the data engines, and not just for purchasing, but for order entry and inventory control too. There's no going back. To really understand what that means for your users, you just have to look at the item information configuration screen. Because advanced workflows have been enabled, the user interface actually changes. Under the inventory section, the system now strictly mandates that you select a specific GL group. Without selecting that group, the item simply is not going to map properly to the general ledger when the transactions actually post. It's a hard requirement. Moving on to part 2, building transaction definitions. So the absolutely crucial point here is understanding what a transaction definition actually is. The best way to think about it, it's basically the master template for any document moving through your purchasing pipeline. It dictates all the accounting settings, the workflow rules, the security controls. Basically, it tells the system exactly how a specific transaction is allowed to behave in the wild. Now consider how these mechanics interact with your inventory subledger. It's pretty cool. A purchase order? That increases your on-order quantity. It builds up your supply pipeline, but it doesn't actually touch the balance sheet yet. Then you have a receiver document, which usually has absolutely no effect on your inventory valuation. It's not until the actual vendor invoice is posted that your on-hand quantity and value finally increase, and then the system automatically goes back and reduces that initial on-order quantity. But listen up, because here is a massive trap you absolutely need to avoid. We call it the downstream financial pitfall. You must never, ever set a purchase order to post to accounts payable or the general ledger. Remember, a PO is just a financial commitment. It is not a realized liability. If you accidentally configure a PO to post directly to the GL, you are going to prematurely inflate your expenses and completely shutter your reconciliation, way before an invoice ever even shows up. Total nightmare. Okay, part 3, enforcing internal controls. The great thing is, Sage Intacct gives you some incredibly strict permissions and approval rules to play with. You can easily set up department value approvals or threshold rule sets that trigger based on specific transaction amounts. You can even set up automated email notifications. But okay, my absolute favorite feature here, approval delegation. Because we all know how it goes. Workflows stall the second a key approver goes on vacation, right? Well, with delegation, when an approver sets their status to out of office, the system just automatically reroutes their approval request to a designated delegate. It keeps your whole business moving without missing a single beat. And you can enforce these controls right at the user interface level, which is super handy. Right in the purchasing configuration settings, there are specific checkboxes you can use to actively restrict your employee users so they can only view the purchasing documents that they personally created. And right below that, you can actually restrict the contacts in the transaction drop-down lists. So users will only see contacts that are directly related to the specific vendor they just chose. It's a really simple way to keep your data remarkably clean and secure. Now, pay super close attention to this next one, the create policy trap. When you are configuring your vendor invoice transaction definition, you absolutely want to set the create policy to convert only. This acts as an immutable architectural gate. By doing this, you are physically blocking your accounts payable users from bypassing all of those purchasing controls we just talked about by just keying in a standalone freeform invoice. They literally must convert an authorized upstream document if they want to generate that invoice. It's brilliant.
All right, let's jump to part 4, the purchasing life cycle.
Let's just trace a standard non-inventory workflow here to see this in action. Think about how an employee first creates a purchase requisition, and then that gets converted into a purchase order. Finally, that PO is converted into a vendor invoice. Now, it's really important to realize how those first 2 steps stay strictly quarantined within the purchasing module itself. But the exact moment it becomes a vendor invoice, it crosses that threshold straight into accounts payable and hits the general ledger. So for your actual end users, their everyday transaction conversion process is generally going to look like this. Step 1, they issue the purchase order just to commit the funds. Step 2, they generate a receiver document when those goods actually hit the loading dock. And step 3, they convert it to a vendor invoice when the actual bill finally arrives. Pretty standard, right? But, what happens when reality doesn't quite match the paperwork? Let's say a vendor only delivers, 5 out of the 10 items you ordered. Well, you have to configure your partial conversion handling. And Sage Intacct gives you 3 distinct choices here. You can leave the transaction open, which just keeps the original PO active until the rest of the stuff arrives. You can close the original and create a back order, which is great because it auto-generates a net new PO for the remaining balance. Or you can simply close the transaction, which just drops that remaining balance entirely. And finally, part 5, downstream financial impacts. Consider the really beautiful cause and effect of a well-architected system here. When your purchasing workflow finally converts over to a vendor invoice, that's when the transaction engine really kicks into high gear. Because of exactly how we set up our transaction definitions and those item GL groups earlier, saving that invoice automatically creates a summary bill in accounts payable. It stages it for cash disbursement, all while simultaneously debiting your expense or inventory accounts. The whole shebang just happens seamlessly in the background. And before we wrap, here is a massive pro tip for when your auditors inevitably come knocking at year end. We call it the audit trail gotcha. When you're in your transaction definition settings, you want to make absolutely sure to check the box for Inherit Source Document Number. What this means is, if you convert PO 150, your resulting vendor invoice is also going to be numbered 150. It is a total game changer because it completely eliminates all that cross-referencing guesswork during audits by just unifying your identifiers right across the subledgers. Which leaves us with this final, really important thought to consider. We know for a fact that a purchase order commits funds, but only an invoice actually hits your general ledger. So if your accounts payable team isn't currently restricted by a convert-only policy, are your current system permissions basically allowing users to just bypass the PO entirely and risk your financial truth? I highly, highly encourage you to log into your environment today and just audit those transaction definitions and security gates. Make sure they're locked down tight. Anyway, thanks so much for joining me on this explainer, and we will definitely see you next time.